Your home and mortgage connection.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun of the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family, your business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We want to chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. And let me remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you. And you can reach out to me directly, 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by. While I do have a great team while it comes to developing a financing plan, a plan to save you money, I personally work with you, even if you don't have any needs today. Save this number in your phone for future reference, 800-306-1990, 800-306-1990. And yes, of course, we're celebrating today National Egg Day. Okay. How do you like your eggs? Does it matter if I say with bacon? Would that be an appropriate answer? I think it is, because almost anything you do with bacon has to be good. So we'll go with eggs with bacon. Let's see. Josh has them scrambled, hard-boiled, fried. Got them all going there, Josh. It looks good. And I even see the bacon there, and the side of bacon as well. You got it all covered. And having beaten anorexia, National Chocolate Macaroon Day. Now, as long as that looks like a hamburger, Josh. Where'd that come from? Holy cow! That must be an AI creation or something? No, huh? Okay, found that one there. That chocolate macaroon. That looks like what do they call that at Islands? They have that wheat bun that has the seeds on top. That's kind of what that looks like. Okay, but we're going to call it a macaroon. It's a chocolate macaroon because that's what it says right next to it. So it has to be accurate, because now I'm assuming Josh got that off the internet, and we know everything on the internet is factual. National Chocolate Macaroons Day, and unfortunately, yes, I like chocolate, almost anything, but I will say it's not good for the weight loss program. And, we're still moving right along, over 130 pounds down right now. If you want to check out some of the articles we've published, rsrlinks.com/AminoPep, rsrlinks.com/AminoPep. Just some articles that we've shared with folks. Let's see what's going on in the markets today. The Dow Jones Industrial Average is down 396 points. That one does not look good. The NASDAQ is down 220. S&P 500 is down 41. Oil's up $2 a barrel. Gold is down $48 an ounce. 10-year Treasury is up almost 5 basis points. Not good. And the mortgage bond is down 19 basis points. Gas prices, do we want to look at them? Well, being that oil's going up, I guess gas prices will probably be going up as well. So we got to get caught up to them, though. I mean, there is a delay in the way gas prices move. But look at that. In Gavins, California, $5.99 a gallon is the current average. Yesterday was $6.01, so we came down a couple pennies. The national average, $4.29 yesterday, $4.26 today. Probably going the other direction because there's more conflict in the non-ceasefire, or the ceasefire, non-ceasefire. How do you say that? I don't even know how you say that one. All you say is that I don't understand how you can have a ceasefire and everyone's fighting with each other. You got a ship that got blown up, or the engine room of the ship. The U.S. took that one out during the ceasefire. Iran took out a airport in Kuwait during the ceasefire. Hezbollah says they're not going to accept the ceasefire terms with Israel. Israel says they're going to keep on fighting with Hezbollah during the ceasefire. And we've had a 2-week ceasefire that I think we're in the 7th week. So, I will say that, I've been a big supporter of the president and his policies, but some of these things are getting a little bit humorous. Just my opinion. I did look and followed some of the numbers last night. I haven't looked at them too closely this morning, but it looks like Steve Hilton and Javier Becerra will be in a runoff. That'll be fascinating. You got the non-politician, first time ever running for office, against a guy that's never done anything but run for office. So that's a fascinating one. Spencer Pratt, it looks like, will be in a runoff with Karen Bass, as long as she's not in Guyana at the time. Another one there, so she's telling us how great Los Angeles is. And I was just talking to somebody last night, and they said, you wouldn't believe, they don't go to Los Angeles often, but said they were in Los Angeles recently. I mean, the streets are, I don't know if they still call it this. When I was younger, when you'd go skiing, and I don't ski anymore, but they have those little hills, they call them moguls. I don't know if that's still what they call the little hills in there. Is it, Josh, moguls? Okay. They said the sidewalk looks like moguls, which is kind of funny that, you got to go up and down hills. Now, not a big deal unless you're a little toddler trying to learn how to walk and you got to go up and down these hills, or a mom with a stroller, or someone who's disabled. So you got all these moguls in the sidewalks. You've got potholes in the streets. And Karen Bass says, LA is a great place. Thankfully, my car sputters at the county line. I don't go into Los Angeles very often. I'd rather, even when we go to Paso Robles, I think I go around Los Angeles. I just don't like the city. And I only, I live, 27, 30 miles from Los Angeles. And, I'd rather go to Palm Desert, 90 miles away, than go to Los Angeles for anything. So we are watching all of those numbers. We're going to talk in the Mortgage Minute about some of the other numbers that are going on in the world right now. And we'll keep on going on over those. You are listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. The mid-year housing market update. Why forecasts changed in 2026. Your child's credit report is the easiest thing to steal. Lock it. How would you feel finding $2,000 in your budget by making one annual decision? All that and more. Reach me anytime. Off-air number 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio, your home and mortgage connection.
Confused about the home buying process? Or curious how much you really know about buying a home? Take the First Home IQ quiz to test your understanding of buying a home. Created by the nonprofit First Home IQ, this 5-minute quiz will give you a score, what you missed, and why. Take the quiz in 5 minutes at rsrlinks.com/FHIQ and find out what you need to know about buying your first home. That's rsrlinks.com/FHIQ.
Are you paying rent because you cannot afford to live in your dream home? Are you paying rent because you don't believe you have the down payment funds to purchase your own home? At Siegel Lending Team at RonIsMyLender.com has up to $25,000 to help qualified people purchase their own home at amazing interest rates. Contact the Siegel Lending Team today at RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037. RonIsMyLender.com.
Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions, as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime. At 800-306-1990, 800-306-1990. The Mortgage Minute today being brought to you by rsrloans.com, rsrloans.com. And every day at this time, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. They don't tell us points paid, points received, or the APR. They tell us the number you need to put in your mortgage calculator to determine your principal and interest payment. If you don't have a mortgage calculator, shame on you. rsrlinks.com/calculators. rsrlinks.com/calculators. About 75 different illustrators for anything you want to think about within your finances. They are all there. So you just go there and get them for free. What did rates do yesterday? Pretty simple. Well, I guess they were mixed. Conventional 30-year fixed, 6.428. That was down. Jumbo 30-year fixed, 6.502. That was down. FHA 30-year fixed, 6.246 up. VA 30-year fixed, 6.059 up. USDA 30-year fixed, 6.15. That was up. And we put out our thoughts about the market, rsrlinks.com/HBOD. That's our community, rsrlinks.com/HBOD. What are the markets doing now? Well, the S&P 500 is down 41 points. 10-year Treasury is up 5 basis points to 4.50. And we're looking at the mortgage bond down 19 basis points. That one, remember, the bond goes down, rates go up. So we saw some improvements yesterday, and they're going the other way today. The thing you come to Ron Siegel Radio for is to figure out, why is it happening? Well, it's oil prices. Oil moved higher. Bonds were pressured lower overnight on news of renewed hostilities between the U.S. and Iran during the ceasefire, and well as Hezbollah rejecting the partial ceasefire with Israel. Now, who controls that? That's controlled by Iran also. Additionally, there are added inflation worries after the U.S. proposed additional tariffs that will go into effect in July on as many as 60 countries, including China, Japan, and those in the European Union, for using forced labor to make goods for export. The slightly better than expected ADP report also pressured yields slightly higher. ADP released their May employment report showing that there were 122,000 jobs created, which was slightly stronger than estimates of 117,000. There was a negative revision to April, bringing that figure down from 109,000 to 105,000. So in net, this report was as expected, and nonetheless, job growth has picked up and rebounded from the lows. Job growth was seen in all sized businesses, with small businesses leading the way, while most of the jobs continue to come from education and health services, which added 57,000 jobs. The gains were more widespread than previous reports. Turning to wages, workers staying at the same job saw their wages increase by 4.4% year over year, which was unchanged from the previous report. Job switchers, those changing jobs, saw their pay increase 6.6% from last year, which is down from 6.5% in April. Bottom line, job growth has been showing some signs of improving, but the majority of jobs continues to come from education and health services, which is not economically sensitive. It is more reflective of the aging population. Some trends showing the improving job trends: 3-month average, 96,000, 6-month average, 67,000, 12-month average, 59,000. That's the Mortgage Minute, brought to you by rsrloans.com, rsrloans.com. Your Credit Matters segment today being brought to you by rsrlinks.com/debt-free, rsrlinks.com/debt-free. Most parents have never thought about their kids' credit report. Identity thieves think about it every day. I am Ron Siegel, certified liability advisor, helping families build wealth through strategic debt management. Here's the part that surprises people. Children are one of the biggest targets for identity theft in America. Not because thieves are cruel, because the math favors them. A child has a social security number. A child has no active credit. A child does not check their report. Most kids will not look at their credit file until college, a first job, or a first car loan. That is 15 to 18-year head start for a thief to open accounts, file taxes, and disappear. By the time the family finds out, the damage is years deep. Now picture this. Imagine a family in California, mom, dad, 2 kids, ages 6 and 9, mortgage of $1.3 million, which is roughly double the national $650,000 average, because California prices run about twice the national number. Solid income, solid plan. The 9-year-old's information has been quietly attached to a phone account, a small store card, and an unpaid utility bill in another state for the past 4 years. Nobody knew. Why would they? Nobody pulled the report. Fast forward age 18. The kid applies for a student loan. The lender pulls a credit report. The lender sees thousands in collections. The kid sees a wall they did not build. That's the cost. Years of cleanup, police reports, bureau disputes, and in some cases, a credit score that needs to be repaired before it even begins. So what does this mean for you? It means protecting a child's identity is not a future problem. It is a today problem. Let me tell you where the leaks come from. Children give their information away every single day without knowing it. Apps, games, schools, streaming online learning, social platforms, even smart toys. Each one collects something: names, email addresses, dates of birth, device IDs, location, voice samples, browsing patterns, persistent tracking identifiers. Recent updates to online privacy laws for kids are pulling some of that back, but the data is already out there. The strategy is to lock the door going forward. 3 simple steps every parent should run this week. Step 1, check whether your child has a credit file. Most kids should not have one. If they do, that's your first warning. You can pull a free check. You can pull a check at rsrlinks.com/FICO. That's rsrlinks.com/FICO. Annualreport.com. I think it's annualreport.com is the tool that'll give you a free report. Doesn't give you any scores. Number 2, place a credit freeze on your child's social security number with all 3 bureaus: Equifax, Experian, and TransUnion. A freeze is free. A freeze stops new accounts from being opened in your kid's name. Nobody can open what nobody can access. Step 3, tighten what they share. Pick the apps. Check the privacy settings. Disable voice recording when it is not needed. Use a kid-only email for school signups. Do not post a child's full birthday on social media. The exact date of birth combined with a name is gold for an identity thief. Strategy beats rate always. Most parents focus on what their child will earn one day. The bigger question is what their child will inherit. A clean credit file is part of that inheritance. At Ron Siegel Radio, I offer a free set of starter tools that put this in motion. Credit monitoring you can set for the whole household. A starter budget tool, an asset tracker. Tools you can use right now. Go to rsrlinks.com/keysteps. That's rsrlinks.com/keysteps. The first 20 minutes can save your child 20 years of cleanup. I am Ron Siegel, your certified liability advisor, helping families build wealth through strategic debt management. Thanks for listening to the Your Credit Matters segment, brought to you by rsrlinks.com/debt-free, rsrlinks.com/debt-free. You are listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, the mid-year housing market update, why forecasts change in 2026, and how would you feel funding $2,000 in your budget by making one, or finding $2,000 in your budget by making one annual decision? All that and more. Reach me anytime. Off-air number 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Confused about the home buying process? Or curious how much you really know about buying a home? Take the First Home IQ quiz to test your understanding of buying a home. Created by the nonprofit First Home IQ, this 5-minute quiz will give you a score, what you missed, and why. Take the quiz in 5 minutes at rsrlinks.com/FHIQ and find out what you need to know about buying your first home. That's rsrlinks.com/FHIQ.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 0186945. You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions, as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. Real-time real estate segment today being brought to you by rsrmoney.com, rsrmoney.com. The mid-year housing market update. Why forecasts change in 2026. If the housing market feels confusing right now, you are not alone. Mortgage rates have risen, home sales haven't picked up like expected, and many buyers and sellers are wondering when things are going to feel easier or be more affordable. The truth is, a lot changed over the first half of this year. Back at the end of 2025, economists were forecasting a much stronger housing market for 2026. They expected mortgage rates to come down, affordability to improve more dramatically, and home sales to rebound. But lingering inflation, economic uncertainty, and growing geopolitical tensions overseas pushed mortgage rates higher than expected. And because rates stayed elevated for longer, many buyers continued to hold off. That's why experts recently revised their housing forecasts for the rest of the year. And if you're watching us on RonSiegelRadio.tv, any of our socials, or the ABC News and Talk, AM 1490, and FM 98.1 video feed, you are seeing a chart of the housing forecast changes for the rest of this year. So we're looking, what does this actually mean for you? Let's break it down. While just about everyone wants mortgage rates to go back to the upper 5s or low 6s, we saw at the start of the year. As of right now, the experts don't think that's likely to happen this year. Instead, forecasts have been updated from the low 6s they originally projected. Many industry organizations are saying rates will stay in roughly the mid 6s this year. The good news is that's still lower than rates were a year ago. Of course, this is based on what we know today. If the conflict overseas comes to an end or inflation drops, this could change. But if you're waiting for lower rates, it may not pay off in the way you expect. Back in late 2025, experts expected we'd sell an average of 4.5 million homes this year. Now, that's dropped a bit to 4.2 million. That tells us something important. Buyers are still hesitant because affordability remains challenging. Higher mortgage rates have made monthly payments harder to manage, especially for first-time buyers, and that slowed the pace of the market compared to what was originally expected. But even though the forecast was revised down, we're still expecting to sell more homes than last year. Once geopolitical tensions resolve and rates begin to settle down, many experts believe that group of buyers will be ready to jump back in. As Lawrence Yun, chief economist at NAR, explains, quote, there is sizable pent-up demand that could be released into the market, unquote. There's already been a few glimmers of renewed hope lately. In recent months, pending home sales have been improving month over month despite higher rates. So if you're able to afford a home at today's rates, it could still make sense to buy now, because otherwise, if you wait, you'll have more competition and potentially fewer homes to choose from when those other buyers jump back in. Builders also expected to have a stronger year. Earlier forecasts projected new home sales would top 700,000 in 2026. Now economists expect will be just shy of that number. Again, mortgage rates are a major reason why, but the upside for buyers is that builders may be even more motivated to sell. That means builder incentives, negotiation opportunities, and pricing flexibility may continue in many markets. So if you live somewhere where there's more new construction, this may actually be a bright spot for you. Builders could be ready to negotiate, and that gives you more leverage to get a better deal. This is one of the most important takeaways from the entire forecast. Even though sales activity is slower, on average, experts did not revise their home price forecast downward. They still expect prices to rise nationally this year. Why? Because while buyer demand has softened, the number of homes for sale is still relatively limited overall. That imbalance is helping support prices even in a slower market. Of course, conditions vary depending on where you live. Some markets are cooling more than others, but nationally, experts are still projecting steady price growth, not a major decline. And that should be a comfort whether you're buying or selling, because sellers don't want a major drop in price. And while buyers may think they do, generally, you feel better about a big purchase when it doesn't depreciate right away. Bottom line, the housing market hasn't rebounded as quickly as experts originally hoped, but that doesn't mean it's stalled. Higher inflation and lingering economic uncertainty caused economists to revise their forecasts for this year. But importantly, when those two things settle down, many experts believe the market will regain its momentum. So don't see this revision in forecasts as a sign of trouble. See it as a temporary reduction to overall conditions and uncertainty. If you want to know what's happening in your market and what it could mean for your plans for the rest of this year, give me a call, 800-306-1990, 800-306-1990, ronsiegelradio.com. Hey, don't forget, if you want to know your market, rsrlinks.com/home report. rsrlinks.com/home report will tell you exactly what's going on in your market. rsrlinks.com/home report. Borrow Smart segment today being brought to you by rsrwealthbuilder.com. rsrwealthbuilder.com. Picture this. Most people think wealth comes from earning more, from a raise, from a promotion, from the next side hustle. But the cheapest, most powerful wealth building tool in your house has been sitting in plain sight your entire life. Your budget, and almost nobody uses it. I am Ron Siegel, certified liability advisor, helping families build wealth through strategic debt management. Today, we're going to talk about the most underrated wealth tool you already own. A lot of people hear the word budget and think it means restriction. No vacations, no coffees, no fun. That is not what a budget is. A budget is just visibility. It's a difference between knowing your numbers and guessing. And every financial decision you make without visibility is just a guess in nicer clothes. Let me give you a picture. Two families, same income, same zip code, same number of kids, both make $150,000 a year. One family has a real budget. They know what comes in. They know what goes out. They know what is left. The other family does not. They look at the checking account on Friday and decide what they can afford to do on Saturday. 20 years later, family one has paid down their mortgage, funded their kids' college, and built about $400,000 more in net worth than family two. Same paycheck, same job, different visibility. So where does the money actually go when there is no budget? 3 places. Number one, subscriptions you forgot you have. The average American family pays about $273 a month in subscriptions they do not actively use. That's over $3,000 a year. Picture this, $3,000 a year for 20 years, no return. Number 2, credit card interest. If you carry a balance, you're not buying things, you're renting them. At 24% interest, the store gets paid once. The credit card company gets paid every month for the next decade. Number 3, timing. Most families pay bills when they show up. Smart families pay bills when cash shows up. Same money, different timing, different result. A real budget catches all 3. Now, here's where this connects to my world, mortgage. Every conversation I have with a family about a home loan starts with a question. Not what is your credit score? Not how much do you want to borrow? The first question is, what does your monthly cash flow actually look like? Because here's something most lenders will not tell you. Eligibility is what a lender approves you for. Suitability is what actually fits your life. Those two numbers are almost never the same. If you know your real numbers, you find the suitability answer. If you do not, you take the eligible answer and stretch yourself thin for 30 years. That's the difference between a payment that builds your wealth and a payment that drains it. This is why strategy beats rate always. A great rate on a payment you cannot comfortably afford is still the wrong loan. A fair rate on a payment that fits your real budget is how you become the family with $400,000 more in 20 years. So what do you do about it? Most people start with a spreadsheet. They build it once, get excited for 2 weeks, and abandon it by month 3. That's normal. Spreadsheets are not the problem. Maintenance is the problem. That's why I offer my clients something called Key Steps. It's a free platform that does 3 things at the same time. It monitors your credit, it builds and tracks your actual budget, and it watches your assets as they grow. 3 numbers, 1 place. Visibility you do not have to manually maintain. If you ever said the words, I do not really know where my money goes each month, Key Steps is for you. If you've ever wondered whether you are ready to buy a home, refinance, or invest, Key Steps shows you the answer in real numbers. And if you want to sit down with me and walk through what your budget is actually telling you about your next financial move, I'll give you 15 minutes on my calendar. You can book at bookrs15.com. That's bookrs15.com. We'll look at the numbers together over Zoom. Here's your first step. Go to rsrlinks.com/keysteps. That's rsrlinks.com/keysteps. Build the visibility. The cheapest wealth building tool you own is sitting right there waiting for you. I am Ron Siegel, your certified liability advisor, helping families build wealth through strategic debt management. Thanks for listening to the Borrow Smart segment, brought to you by rsrwealthbuilder.com, rsrwealthbuilder.com. You are listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, how would you feel finding $2,000 in your budget by making one annual decision? All that and more. Reach me anytime. Off-air number 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Confused about the home buying process? Or curious how much you really know about buying a home? Take the First Home IQ quiz to test your understanding of buying a home. Created by the nonprofit First Home IQ, this 5-minute quiz will give you a score, what you missed, and why. Take the quiz in 5 minutes at rsrlinks.com/FHIQ and find out what you need to know about buying your first home. That's rsrlinks.com/FHIQ.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender. Are you tired of paying rent? Are you tired of paying someone else's mortgage? Do you know qualified folks can potentially purchase a $500,000 home for less than $5,000 out of pocket? Ron Siegel can help qualified people purchase their own home at amazing interest rates. If you're tired of paying someone else's mortgage, reach out to Ron today at ronismylender.com. That's ronismylender.com. Licensed under NMLS 217037, Equal Housing Lender. Are you like many of your neighbors trying to figure out how to pay off your debts so you can retire someday? Build bigger savings. Invest in opportunities. Visit rsrnodebt.com. Debt will destroy 50% of Americans from being able to retire earlier and with more. What if you could have a guaranteed program that could show you how to eliminate all of your debt in 10 years or less, all without having to spend more each month than you spend right now? Yes, that's correct. All without spending more from your checkbook each month than you are today. Get your free analysis today to see if you qualify. Visit rsrnodebt.com. Log on today for your free analysis, rsrnodebt.com. No purchase necessary. The free analysis takes only 2 minutes. rsrnodebt.com. Ron Siegel Radio is your home and mortgage connection. Go to rsrnodebt.com. rsrnodebt.com.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. Real-time real estate segment today being brought to you by rsrmoney.com, rsrmoney.com. Picture two friends, same job, same income, same zip code. One buys a home at 30, the other keeps renting and waits for the perfect time. 20 years go by, the buyer has about $119,000 more in net worth. That's not opinion, that is the math. I am Ron Siegel, certified liability advisor, helping families build wealth through strategic debt management. Today, we're going to talk about the cost of waiting. Most people think the question is, can I afford to buy a home? The real question is, can I afford not to? Because every year you rent, three things happen at the same time. Your landlord's home goes up in value, your landlord's mortgage gets paid down, and your rent check funds someone else's retirement. You are building wealth, just not yours. Now, let me show you the math. The Urban Institute looked at this. They tracked renters and buyers who started with similar incomes. By age 50, the homeowners had roughly $119,000 more in wealth than the renters. Same job, same paycheck, different decision. So where does that $119,000 come from? Three places. First, principal pay down. Every mortgage payment you make has a piece that goes toward the loan balance. That is forced savings. You may not feel it, but you are paying yourself. A renter does not have that. Second, appreciation. Homes go up over time. Nationally, somewhere around 4% a year on average. In California, historically, closer to double that. On a $650,000 mortgage with a home worth more than that, even modest appreciation adds up to real money over 20 years. Third, leverage. This is the one most people miss. When you put 5% down on a home, it appreciates 4%. You did not earn 4%. You earned 4% on the whole home with only 5% of your own money in the deal. That's leverage, and leverage is how regular people build wealth in this country. If you want to see this side by side for your numbers, your rent, your zip code, your timeline, I have a tool for that. It's my rent versus own presentation. Go to rsrlinks.com/RVO. rsrlinks.com/RVO. Robert Victor Ocean. It shows you the real cost of renting next to the real cost of owning. Not theory, your math. Now, I can already hear someone yelling at the radio, Ron, rates are too high. Prices are too high. I'll wait. Let me tell you what waiting actually costs. If you wait 5 years, and a home that costs $650,000 today goes up just 4% a year, That same home now costs about $790,000. You did not save money by waiting, you just paid more. And here's the part nobody talks about. While you were waiting, you also paid 5 years of rent, $3,000 a month, $180,000 out the window. Picture this, $180,000 in rent, zero equity, and the house you wanted now costs $140,000 more. That is the cost of waiting. So what does this mean for you? If you are in your 20s, listen carefully. The first home does not have to be the dream home. It has to be the first home, a condo, a townhouse, a starter house in the right zip code. The goal at 30 is not to find perfection. The goal is to start the clock. Because compound growth, principal pay down, and leverage all need one thing to work: time. You give them time, they give you $119,000. If you're over 30 and you're listening to this thinking, Ron, I missed it. You didn't miss it. The math still works. It just works on a shorter runway. The best time to plant a tree was 20 years ago. The second best time is today. Here's what I do not want you to do. I do not want you to buy a house you cannot afford. I do not want you to stretch beyond what fits inside a real budget. Eligibility is what a lender approves you for. Suitability is what actually fits your life. Those two numbers are usually very different. The job of a certified liability advisor is to find the suitable number, not just the eligible one. And here's something else most buyers do not know. In today's market, sellers are getting cautious. A pre-approval letter is no longer enough to win the house you want. That's why I offer something called the Certified Buyer Program. It's a fully underwritten approval that makes your offer look as strong as cash to a seller. Same buyer, same loan, different position at the table. You can learn about it at rsrlinks.com/certified buyer. That's rsrlinks.com/certified buyer, because strategy beats rate always. A great rate on the wrong house is still the wrong move. A fair rate on the right house with the right offer and the right zip code is how you become the friend with $119,000 more by 50. So here's your first step. Before you shop, before you tour, before you put in an offer, get your foundation right. I offer a free platform called Key Steps. It helps you monitor your credit, build a real budget, and track your assets while you save for the down payment. 3 things that decide whether you buy at 30 or 35. Go to rsrlinks.com/keysteps. That's rsrlinks.com/keysteps. Take the first step. I am Ron Siegel, your certified liability advisor, helping families build wealth through strategic debt management. Thanks for listening to the Real-Time Real Estate segment, brought to you by rsrmoney.com, rsrmoney.com. Your Credit Matters segment today being brought to you by rsrlinks.com/debt-free, rsrlinks.com/debt-free. Sports betting will not show up on your credit report, but the credit card you use to fund the bet will. That's the part most people miss. I am Ron Siegel, certified liability advisor, helping families build wealth through strategic debt management. Sports betting is now a topic at the kitchen table, the office, and the group chat. Apps make it easy. A few taps and you are in. Most bettors assume the activity is private. From a credit standpoint, the activity itself is private. The funding is not. Here's how FICO actually works. Your score is built from 5 things: payment history, amounts owed, length of credit history, new credit, and credit mix. Sports book activity is not a trade line. The bureaus do not see a line that says wager or win or loss. They see one thing: your balances. So what does this mean for you? If you fund bets with a credit card, your balance goes up. Higher balance means higher utilization. Utilization sits inside the amounts owed category, which is roughly 30% of your FICO score. Run a $5,000 limit card up to $4,000 in fund bets, and your utilization just hit 80%. That alone can drop your score by 30 to 50 points overnight. The sports book did not report you. Your card did. If you carry balances, we walk through a strategic way to manage utilization and payments at rsrccpayment.com. That's rsrccpayment.com. Now picture this. Imagine a family planning to refinance a $650,000 mortgage. They're in good shape, solid income, long history. The husband starts using a credit card to fund a sports betting app during football season. He pays it off, but he carries the balance for 30 days at a time. The statement closes high. The bureaus see high. The FICO score drops. The refinance comes in 40 points lower than expected, and the rate offered moves with it. He never missed a payment. He just did not realize his card was telling on him. And it gets sharper. Some sports books process credit card transactions as cash advances. Cash advances often carry interest from day one with no grace period and higher rates. So the same $1,000 can cost more than you think and stay on the balance longer than you planned. Some newer prediction market platforms do not accept credit cards at all. They require bank transfers or debit. That's actually better for your credit report because it does not touch a credit line. The money still leaves your account, but your FICO score does not flinch. For an extra layer of protection, consider something like Cash App or a debit card that is not tied to your primary bank account. That way, the funding is firewalled from the account that pays your mortgage, your insurance, and your day-to-day bills. Now to bigger risk, cash flow strain. If betting losses pile up, the first thing that suffers is the budget. The next thing that suffers is payment history. Payment history is roughly 35% of your FICO score. One missed payment can drop a score by 80 to 100 points and stay on your report for 7 years. Here's the part that nobody likes to hear. Lenders do not judge the hobby. The math does. When I sit down with a family on a Zoom call to plan a purchase or refinance, we look at the household first, total debt, average balance over time, payment patterns. We build the picture the underwriter is about to build. If a credit card carries an unusual swing because of betting funding, that swing shows up. The conversation is honest, not personal. What can you do? 3 things. First, if you bet, fund it through a debit or bank transfer instead of a credit card. Better yet, use something like Cash App or a debit card that is not tied to your primary account. The fun is the same. The score does not move. If you do choose to use a credit card, watch rsrccpayment.com. That's rsrccpayment.com. We show you exactly how to manage utilization and payments so your score does not take a hit. Second, check your FICO score before you make any big financial move. Buying, refinancing, pulling equity. Anytime a lender is going to look, you should look first. We offer a free FICO score checker at rsrlinks.com/FICO. That's rsrlinks.com/FICO, FICO. Third, keep your utilization under 30%. Better, under 10%. That single rule protects more credit scores than anything else. Strategy beats rate always. Your FICO score is one of the biggest inputs into the rate a lender will offer you on your next loan. A 40-point swing can mean tens of thousands of dollars over the life of a mortgage. Knowing what moves your score is not optional. It is part of your wealth plan. At Ron Siegel Radio, I offer a free set of guided next steps, credit monitoring, a starter budget tool, an asset tracker, tools designed to keep your score where you want it and your blended rate where it should be. Head to rsrlinks.com/keysteps. That's rsrlinks.com/keysteps. The tools are free. The first step is yours. I am Ron Siegel, your certified liability advisor, helping families build wealth through strategic debt management. Thanks for listening to Your Credit Matters segment, brought to you by rsrlinks.com/debt-free, rsrlinks.com/debt-free. Borrow Smart segment today being brought to you by rsrwealthbuilder.com, rsrwealthbuilder.com. If your homeowner's insurance bill went up this year and you just paid it, I want you to stop for a minute. Premiums are up 24% in 3 years. The average homeowner is now writing a check for $3,303 a year, and most people treat that bill like a fixed cost. It is not. I am Ron Siegel, certified liability advisor, helping families build wealth through strategic debt management. Here's what's happening. Insurance companies have been hit with a long list of pressures. Inflation on the cost of rebuilding a home, more frequent and more severe storms and wildfires, rising reinsurance costs, and a lot of buyers moving into riskier zip codes. All of that lands on your renewal notice. In some states, it's even worse. In Louisiana and Nebraska, the average policy now runs more than $6,000 a year. That's over $500 a month before you have made a single mortgage payment. So what can you actually do about it? Let me give you 7 levers. Number 1, fortify the home, storm shutters, a reinforced roof, wildfire fire resistance vents, moisture sensors that catch leaks early. These are not cheap, but a study from the National Institute of Building Sciences found that hardening a home against hurricane winds saves $6 for every dollar you invest. Ask your insurer which upgrades qualify for a discount before you spend $1. Number 2, raise your deductible. Most insurers recommend at least $500. Going from $500 to $1,000 can drop your premium by as much as 25%. The catch, you have to actually have that money sitting in savings because you pay it before the insurance kicks in. Strategy beats rate always. Liquidity matters more than the lowest premium. Think about our Roth IRA strategy when it comes to those deductibles. Number 3, stop filing small claims. This one feels counterintuitive. The advice from a major policy holder advocate is simple. Do not file a claim that is below your deductible and avoid small claims when you can pay them yourself. Every claim can push you into a higher risk category. Save your policy for the losses you cannot absorb. Number 4, do not pay for more than you need. Every year, look at your policy limits and the value of what you actually own. A fur coat you insured for $5,000 10 years ago may not need that floater anymore. And here's one most homeowners miss. You're insuring the replacement cost of the structure, not the value of the land. The land cannot burn. Do not include it in your coverage amount. Number 5, strategize about insurers. Bundling home and auto can knock 5 to 15% off your premium. Staying with the same insurer for 3 to 5 years can save another 5% and 10% for 6 years or more. But here's the trap. Loyalty alone is not a strategy. Shop your policy every year or two. A recent study from NerdWallet found that smart shoppers save more than $2,000 a year. That's real money. Number 6, improve your credit. In most states, insurers use a credit-based insurance score to set your premium. The same things that lift your mortgage score lift your insurance score. On-time payments, lower credit utilization, a clean profile. If you've not seen your real FICO score lately, go to rsrlinks.com/FICO. That's rsrlinks.com/FICO. Number 7, think about insurance when you buy. Proximity to a fire hydrant, a professional fire department instead of volunteer, newer electrical, heating, and plumbing systems, brick and wind zones, wood frame in earthquake zones. The Insurance Information Institute says choosing wisely can drop premiums 5 to 15% from the day you close. Now, I want to be clear. I am not an insurance agent. I do not sell insurance. What I do is sit down with families, look at the whole picture, and refer you to trusted insurance professionals when there is money to be saved or a gap to be closed. Here's the bottom line. Picture this, a homeowner with a $650,000 mortgage paying $3,303 a year on insurance. By raising the deductible, shopping the policy, and cleaning up the credit profile, that the homeowner trims about $1,500 off the annual premium and tightens the savings position to absorb the higher deductible. That is not magic. That is strategy. If you want the tool I share with my own clients to track credit, build a budget, and watch your assets go to rsrlinks.com/keysteps. That's rsrlinks.com/keysteps. And remember, strategy beats rate always. I am Ron Siegel, your certified liability advisor, helping families build wealth through strategic debt management. Thanks for listening to the Borrow Smart segment brought to you by rsrwealthbuilder.com, rsrwealthbuilder.com. And as always, I ask, set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to Josh and Sean who are engineering us today. And of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.